Everybody, it's Al Eberrohr with Financial Intelligence Training. It is the last week of June, which means the last week of the month, the last week of the quarter, and I am here in Laguna Beach, California. It is a gorgeous summer day here. Now, if you've been watching on the post, you know that we've been talking a lot about the divergence between the betas and the bigs. On Wednesday of last week, I discussed about the possibility and clarifications of the divergence that we've seen, meaning it's either a half full glass or a half empty glass. And what I mentioned was, if some of the waning areas would rejoin the party, if you will, and start giving some positive participation, well, that would be a much needed boost to the market. Now, I said the following day on the Friday Post on Friday that Thursday's price action was the exact opposite of that. Well, lo and behold, here we came in this week to start on Monday with a gruesome picture. The Dow at one point was minus 500 points, closing down 382 on that Monday. And this is extremely important because of this trade talk that we are continuing to see. So in today's conversation with one of the financial intelligence training students, he asked me specifically, you talk about noise. Is this trade discussion that we are seeing, is that noise? So I thought this was a really good topic for our post this week. So let me add some clarification to that. First off, this noise that shoves the market down just dramatically on Monday and the recovery that we saw on Tuesday, that is definitely trading noise. Now, is that trading noise going to materialize into something more substantial that is ultimately going to have portfolio implications? And this is something that we should talk about. So I'm going to call everybody's attention to Harley-Davidson, HOG. So the trade chatter that we're seeing right now between our current administration and the rest of the world is now being retaliated by Europe. And as you probably know by this point, they're adding additional tariffs, and Harley-Davidson's tariffs is going from 6% to 31% per unit, which basically equates to about $2,200 per sales. Now, this is a really important figure because Harley-Davidson sells 40,000 motorcycles in the European market, and that's their second biggest market, second to here in the United States. Now, Harley-Davidson has decided that they can't pass on that surcharge, that tax, onto the consumers because it's going to slow down sales. So what they've decided to do is take the hit themselves. $2,200 per motorcycle sold. Now, let's equate to that. That's a significant charge to their earnings. And that's not something that they can continue to do. So in retaliation, or I shouldn't say in retaliation, better said in response to that, Harley is going to move their American jobs to an international plant and avoid those local tariffs, meaning the US tariffs, the European tariffs. So what does that mean? Job loss in the United States, right? It means that's going to get shut down. The stockholders in the interim are going to end up having to pay for that. And that is why nobody wants to see a trade war materialize. Today, that's noise. It is not necessarily going to be the case that comes to fruition and that the trade tariffs really wreak massive havoc in the markets. And kind of the equation the parallel that I can draw to this equation is, I live in South Florida. I live in Fort Lauderdale, as many of you know. Last September, we had an amazingly destructive hurricane that tore through Puerto Rico, worked its way to South Florida, and this Category 5 hurricane paled in comparison to what it did in Puerto Rico. Thank goodness for that. Unfortunately for those in Puerto Rico, but for us in Florida, we were somewhat spared. Now, that's noise, right? And not necessarily a substantial shift. So think about me and my family. We had to evacuate. We left. I had to board up the house. All that's noise. Now, it worked out because there was no damage to my home. Otherwise, that would have been a substantial shift, and noise would have turned into something very serious. So let's turn that right back to the markets. And today, this trade chatter is currently noise. It's not necessarily yet, keyword yet, materialized into something. However, it has the potential, just like that hurricane had the potential to make massive destruction to me and my neighbors. Now, why is this all relevant for portfolio management? Because the day-to-day noise is important for trading. It's less important for portfolio management if everything you have within your financial plan is in place. Meaning, are you making portfolio adjustments as warranted by the market? So let's discuss that currently with what's happening. The divergence between the betas and the bigs continues. On Monday, the price action that we saw in the Dow sent it testing the 200-day moving average. And when I say testing, it actually pierced that 200-day moving average for the first time in, I don't know, quite some time. And then it popped right back up. I think the last time we saw that was 2016. So we popped back above the 200-day moving average, closing just slightly underneath it, right? Maybe 100-ish points. Now, this is extremely relevant because of the defense that I believe that we may have seen from the market. Now, could that be an end of quarter thing? I don't know. Could that be the fact that the market was just selling off in anticipation, much like my family and I left South Florida in anticipation of a major destruction, and here was that sell-off. Today we're seeing a little bit of that bounce. Really what's relevant is, do we continue to see this breakdowns that we saw affected because of Monday night's chatter on tariffs that we're not going to allow any foreign participation, and that's what pulled in the leading Russell and the NASDAQ. Now, very relevant on this subject matter is, it's still a very fragile undertone, which what we've been discussing. There have only been a few names that have been leading that. And if you go back, you're going to see massive pullbacks. Take a look at Amazon's price action Monday. Take a look at Facebook's action on Monday. Take a look at Google's action on Monday. Look at Netflix action on Monday. These were some of the leaders, and look at how they really pulled back in, right? Out of the tech, look at Estee Lauder, EL. Look at that big pullback that we saw. So there was really certain areas that were leading the market that got hit hard. Doesn't mean that they're done. It just means that that's the opposite of the help that we need. And furthermore, in the Dow, those components, they continue to show their weakness. So where are we right now in this divergence? Is it glass half full or is it glass half empty? Meaning, are the weak participants going to join that party and provide the much needed support and subsequent participation to lift the markets, or are the mighty going to tire and push us down? That's the day-to-day noise, but that's where the implications come into play on overall portfolio management and subsequent modifications that may be made. So take this time, understand your risk, understand the modifications, make sure things are in line with your financial plan. And if you don't know what that means, please check us out at Financial Intelligence Training. I think you'll find some of the answers there. And if you are trading the noise, please remember, guys, stock and stock options involves a substantial degree of risk. It's not suitable for everyone. And if you like to watch the charts like me, remember, past performance is not necessarily indicative of future results. I'm Al Baroa, Financial Intelligence Training. Thanks for watching.